Hey everyone, welcome back to Corporate Decoder. Today, Interactive Strength Incorporated announced a significant change in its accounting firm, and it hints at deeper issues. Quick note, this is not financial advice, just my take on public filings for educational purposes. This audit change comes right after the company announced a reverse stock split, and the reasons behind switching auditors are raising some eyebrows. So what exactly happened here with Interactive Strength Incorporated, ticker symbol T.R.N.R? We are looking at a Form 8K filing, which is basically a report of major events that shareholders need to know about right away. The key event here, filed on the 26th of June 2026, is about a change in their independent registered public accounting firm. This section spells out the details. On the 26th of June 2026, the company's audit committee decided to dismiss Deloitte and Touche LLP, who had been their auditors. Now, dismissing an auditor is rarely a neutral event when a company parts ways with its accounting firm. Especially when they have a history of going concern warnings, it is definitely something to pay close attention to. Deloitte's reports for the past couple of years, for 2025 and 2024, did not have any weird opinions, meaning they weren't saying the financial statements were wrong or anything like that. However, they did include a paragraph about a substantial doubt about the company's ability to continue as a going concern. This means essentially that the auditors were worried the company might not be able to stay in business for much longer. This is a really serious red flag. Think about companies like Bed Bath & Beyond or Tupperware that faced similar warnings before their challenges became even more severe. When you see this, it often means tighter financial times are ahead, or perhaps even a potential bankruptcy risk down the line. Historically, companies with going concern notes, especially smaller ones, often face significant financial distress, sometimes leading to delisting. For a $1,000 investment in such a situation, the risk of substantial loss is very high. The filing also states that there were no major disagreements between the company and Deloitte on accounting principles or financial reporting. This is usually good news, as disagreements can signal underlying financial reporting issues. However, the lack of disagreements doesn't erase the going concern warning. Most importantly, the filing mentions that there were no other reportable events that would typically cause an auditor to resign or be dismissed. But then they immediately dive into a significant problem. This is where it gets really interesting. The company admits that in their 2024 and 2025 annual reports, they identified material weaknesses in their internal controls. What does that mean in simple terms? It means their systems for tracking and reporting their money are flawed. Specifically, they lacked proper policies, resources, and formalized controls for their financial transactions. They also noted there wasn't enough segregation of duties, which means one person might have too much control over a financial process without anyone else checking them. This is a recipe for errors, fraud, or just plain mismanagement of finances. The filing even says these weaknesses remained unremediated, meaning they hadn't fixed them by the 31st of December 2025. The core issues were a weak control environment, problems with risk assessment, communication of financial information, and monitoring activities. So even though they say there were no disagreements with the auditor was certainly aware of these significant internal control failures, which likely contributed to the going concern language. The company then states they got a letter from Deloitte, which is included as an exhibit. This letter usually confirms whether the auditor agrees with the company's statements about the auditor change. We'll assume for now Deloitte confirmed these statements, but the content of that letter itself is key. Now, who is the new auditor? Interactive Strength Incorporated has engaged Cherry Bekaert LP as their new independent registered public accounting firm for the fiscal year ending the 31st of December 2026. The filing also states that the company had not consulted with Cherry Bekaert LLP on any significant accounting or auditing matters before this engagement. This is often included to assure investors that the new auditor isn't coming in to fix problems from previous advice. However, given the serious internal control issues and the going concern warning, bringing in a new audit firm, even without prior consultations, doesn't fundamentally change the underlying financial health concerns. It is more of a procedural change. Exhibit 16.1 is that letter from Deloitte and Touche LLP dated the 1st of July 2026. This is where you'd find their official say on the company's disclosures regarding the auditor switch. And finally, the report is signed by Caleb Morgret, the Chief Financial Officer and Principal Financial Officer, dated the 1st of July 2026. This date is interesting because the events described happened on the 26th of June, but the report is signed a few days later, implying the signing officer reviewed the situation and the auditor's letter before finalizing. So what does this all mean for Interactive Strength Incorporated, T.R.N.R, this 8K filing? Coming just after news of a reverse stock split paints a picture of a company facing significant financial challenges. The dismissal of Deloitte, a major accounting firm, especially when coupled with those going concern warnings and unresolved material weaknesses in internal controls, is a serious cause for concern. It suggests that the company's leadership is aware of the precarious financial situation and is perhaps looking for a fresh start with new auditors, or maybe trying to meet certain listing requirements. The fact that they are implementing a reverse stock split, which was announced around the same time, is often a maneuver to boost the stock price to avoid delisting from exchanges, like the Nasdaq. However, reverse splits historically do not fix underlying business problems and can sometimes be a precursor to further declines. About half of microcap companies that do reverse splits eventually end up delisted. Considering Interactive Strength's market cap of only $2 million and that a reverse split typically aims to make the stock look more substantial, this action, combined with auditor changes and internal control issues, suggests a company in distress, fighting to stay afloat. My biggest concern is the combination of the going concern warning, the material weaknesses that haven't been fixed, and the reverse stock split. These are all strong indicators of underlying financial instability. What I am actually looking for is transparency from the new auditors, Deloitte LLP, in their upcoming reports to see if they can provide more clarity on the company's financial health and whether they believe the remediation plans for internal controls are actually working. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, please like this video, subscribe for more corporate insights, and join our Discord community via the link in the description.